Today is the 6th of September 2021. My name is David Hickson, and in today's market update I'm going to be discussing the price of gold. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. So let's take a look at gold. My previous market update about gold was in the middle of July. I think it was the 19th of July, around about this time over here where I have placed the crosshairs. And I'd like to just step back a little bit in time and speak about what has happened since then. I'd encourage you to go back and take a look at that video on the 19th of July about gold. And I have an important point to make, I think, about the way in which we track an analysis performed on the basis of the cycles that we're seeing as it moves through time, because with each new bar of data we have more information and we can refine our analysis. Hurst cycles, or a Hurst cycles analysis, is not an absolute science. It's not a simple matter of when price reaches a certain level then we know with absolute 100% certainty that something has happened. It is as much an art as it is a science, and the way in which we handle the level of uncertainty that results from the fact that it is not an absolute science is an absolutely vital part of applying your Hurst cycles analysis. And it's become a bit of a theme in terms of the videos I've been recording recently, because I've realized it is perhaps the most critical aspect of Hurst cycles. Hurst cycles in themselves are fairly simple. We have a list of multiple cycles that influence the financial markets, and of course we have software now that performs an analysis. So you don't even need to be an expert analysis, but what you do need to be able to do in order to apply your Hurst cycles analysis profitably is you need to understand this concept of how we deal with the degree of uncertainty. So if you take a look at that video in July of this year that I recorded about gold, and it's the final few minutes of the video, you don't have to watch the whole thing, but you will know that there was, or you will see if you watch that video, that there was a nest of lows. Now, a nest of lows is this collection of circles and whiskers that you see at the foot of the chart. So here's the nest of lows for the 18-month cycle. And a nest of lows tells us that we are expecting a cycle of a particular magnitude to happen at around about that time. So in this particular instance, we are expecting an 18-month cycle trough to form in early 2022, or perhaps near the end of this year. So that is, of course, what a nest of lows is. You probably know that by now. And if you go back and take a look at the video that I recorded in July, you will see that in early September or in sort of late August, there was a nest of lows somewhere around about here for the 20-week cycle. And I pointed out that we were expecting a 20-week cycle to form. I even mentioned at the time that this trough over here was a potential 20-week cycle that might have formed in the markets. But then I moved on and started speaking about the bigger picture. Now, with the benefit of hindsight, we can look back and we can see that in fact the 20-week cycle has now been found in the analysis, which means that the software that is performing this Hurst cycles analysis has positioned a 20-week cycle trough over here beneath this low price, which occurred, I think that's in about the first week of August. So in fact that is a cycle trough that occurred slightly early according to the expectation of our nest of lows. So I would encourage you to go back and have a look at that and see if you can grasp the fundamental ideas behind this, which is that we have a nest of lows warning us to expect a trough, or of course we have a nest of highs warning us to expect a peak in a particular market. And that expectation gives us a certain amount of insight, because we're expecting a trough to form, and then as we are able to watch price movement, in particular the way in which price interacts with the cycle tools, the VTL and my favorite tool, the FLD, we are able to then make sensible trading decisions. I hope that that little discussion helps to shed some light in terms of what we're doing. So let's catch up with the analysis as we see it at the moment. Of course, we still have the very big trough over here in March of 2020, and we've got the very big peak over here that formed in August of last year. And so those are the really sort of important moments that have happened. Recently, we have had the 40-week cycle trough, as I mentioned in the previous market update, over here in March of this year, and then the 40-week cycle peak, which formed in, was that end of May or perhaps early June of this year. So that's the 40-week cycle peak. And now we have the 20-week cycle trough over here in August. And so the question is, of course, what's going to happen now? Just a quick little point. You'll notice that this peak over here consists of solid triangles, and that is because the software that is performing the analysis, Sentient Trader, has enough confidence in positioning that peak there that it is able to fill in those triangles there of a solid color. However, you will notice that the 20-week cycle trough over here, and let me just clear this drawing so that you can see this a little more clearly. The 20-week cycle trough over here consists of hollow diamonds. We're often asked what that means. What it means is that it is likely that the 20-week cycle trough did form there, but there are other possibilities, and so it is not absolutely certain. Now, I've already mentioned that it's almost impossible to ever achieve absolute certainty in any analysis, but we have to, obviously, at some point we have to accept that a particular magnitude trough or peak has formed and move on with almost 100% certainty. So where you see a solid triangle or a solid diamond, we have achieved a certain amount of certainty in the position of that trough or that peak. I hope that makes sense. So what is going to happen now? Well, if you are used to looking at the diamonds and the triangles on your chart, then you can see that, of course, the important thing that is happening is that we have a nest of lows for the 18-month cycle over here, wanting us to expect an 18-month cycle trough towards the end of this year or early next year. However, I should point out this whisker, this yellow line over here, which represents the range of time in which it is reasonable to expect an 18-month cycle trough to form. And so that does raise the possibility that this trough, it was a very sharp, fairly prominent trough that formed in early August, it does raise the possibility that that trough could be an 18-month cycle trough. So now this is where the aspect of uncertainty comes into play. I believe that the analysis that I'm showing you is the correct analysis, but we need to bear in mind that it is just possible that the 18-month cycle trough did form there. Another reason why we might expect an 18-month cycle trough to have formed there is because of the likelihood that an 18-month cycle trough has formed in many other instruments. Stock markets, of course, are not directly correlated to the price of gold, but there is a great deal in common. It is one of Hurst's fundamental principles, the principle of commonality, which is that all financial markets move with a great deal in common. And so the fact that we saw an 18-month cycle trough in stock markets probably, and I would encourage you to take a look at previous market update videos to understand the debate surrounding the position of that 18-month cycle trough. But the fact that we very possibly saw an 18-month cycle trough in stock markets does raise the possibility that that was also an 18-month cycle trough in gold. And indeed, it's not impossible, as you can see from the position of this whisker. The circle, of course, represents the exact time that an 18-month cycle trough is expected. The line, which we call the whisker, is representing the range of time in which that particular trough could reasonably be expected to form. However, the analysis has presented that as a 20-week cycle trough. So the way that I approach this is that I consider that to be a 20-week cycle trough, but it is just possible that it might also be 18 months. And we're going to zoom in a moment, and I'm going to discuss how we deal with that uncertainty. So that is what we are expecting according to this analysis, for price to come down and form an 18-month cycle trough towards the end of this year. What's happening in terms of the peak analysis? And as I've mentioned in previous market update videos about gold, I believe that the cycles are better analyzed considering that they are synchronized at their peaks than at their troughs. I'm not going to go into detail about that now because I have discussed it in many previous market updates about gold, so you can take a look at pretty much any video in which I've discussed gold and you can see a discussion of that possibility. The important thing in terms of today's discussion is it means that the peak analysis is, in my opinion, usually more reliable. So what's happening in terms of the peak analysis? Well, here is a nest of highs for the 18-month cycle peak, but that is likely to happen after this 18-month cycle trough. So in terms of the sort of slightly bigger picture, price dropped down from the peak in August of last year, hit this 40-week cycle trough in March of this year, bounced up to a 40-week cycle peak. That was in, was that May? I think May or June of this year. And now it's heading down into an 18-month cycle trough. And that pattern that I've drawn there is a pattern that I describe as a Hurst zigzag. It is effectively a zigzag pattern with a leg down, a leg up, and a leg down again. And we can actually plot the zigzag tool in Sentient Trader, which let me do that now. So let me show the zigzags and let's display the 18-month zigzag here. There we go. That's in fact the exact zigzag that I have just presented by drawing it on the chart. We have our first leg down, then we have a second leg up, and then a third leg down. So you can see that in terms of the 18-month cycle zigzag, we are projecting a move down into this 18-month cycle trough, which is expected around about the end of this year. As I mentioned in my previous market update about gold, as time passes, we are able to refine the position of this zigzag. Well, we don't do it, the software does it for us. But as we have more data, the software can project the target for this zigzag, the ending of the zigzag pattern, if you like, which is where the 18-month cycle will form a trough. And if you compare this zigzag to the zigzag that I presented in the previous market update about gold, you can see that we have indeed, or Sentient Trader has refined the position of this target. So the target is presented in terms of time and price. And zigzag targets can be fairly accurate. So that's an interesting target to watch for. We can add other zigzags. So we can add the 40-week cycle zigzag. And here you can see in a little more detail what is really expected to happen now. The 40-week zigzag represents a move down here into the 20-week cycle trough. Then we're expecting a move up into the 20-week cycle peak, which is this nest of highs over here, which is probably expected in about November of this year. That's that peak over there. So we're expecting a move up to that peak, and then we will experience a move down into the 18-month cycle trough over here for this nest of lows. So that is how the zigzag tool can help us to refine our understanding of what is happening. Another way of understanding the implications of the analysis is, of course, to take a look at the composite model line, which composes the information that has been gathered on the basis of the analysis. In this case, two analyses, the peak analysis and the trough analysis. These are two separate analyses, I should remind you, and it recomposes that information into a composite model line, which effectively gives us not necessarily a projection, but it gives us another way of visualizing the implications of this analysis. And so you can see the composite model line is showing a move up at the moment, which is of course what we are experiencing. It shows a peak forming fairly soon, and that peak is obviously the 80-day cycle peak, which is expected now. We're going to zoom in a moment and take a look. Then price will move down, come up to a 20-week cycle peak. That's that peak expected in November, and then we'll get the move down into the 18-month cycle trough. Okay, so that's what the composite model line tells us to expect. Let's zoom in, and let's zoom in first of all at this sort of scale, and we can see how the composite model line fits into the price action at this scale. Here is the nest of highs for the 80-day cycle peak, which, as you can see at the moment, is slightly overdue. It was expected a week or 2 weeks ago. It is possible that this is the 80-day cycle peak over here, which will change our expectations slightly, because if that is the case, then the next peak that we're heading towards is going to occur later, in terms of it being the 20-week cycle peak over here. Following the formation of that 20-week cycle peak, of course, we are going to experience this move down, according to this analysis, into the 18-month cycle trough. So now, what about the fact that I have suggested that it is just possible that this was an 18-month cycle trough as opposed to a 20-week cycle trough? Well, this is where the way in which we apply our understanding of the Hurst cycles analysis becomes so important. We need to embrace the fact that there is some uncertainty. It's not a huge amount of uncertainty, and we need to understand exactly what the degree of that uncertainty is. That uncertainty does not mean that we need to be stuck like a deer in headlights, not knowing what to do because we have uncertainty. That is not the case at all. What we can do is we can develop what I call a level of confidence in the analysis. And so I'm going to zoom in here again and speak about how we can track what is happening in price, and let me hide the composite model line, to help us to deal with the level of uncertainty and to watch levels to understand what we should be doing with our trading. So this is where I start applying Hurst cycle tools, and I'm not going to speak about VTLs in this video because there aren't VTLs that provide us with a tremendous amount of information. I'll give you a glimpse of the 20-day VTL, which is there and is something you need to be watching, because when price crosses down below the 20-day VTL, we will have confirmation that a 40-day cycle peak has formed in the markets, and that's going to be useful information. But it's a bit of a tight VTL. It's very close to price, and in fact it's been pushed down by the software because of the fact that it was so steep for this initial rise. So there is quite a lot of detail to speak about there, which is going to make this video terribly long and boring probably, so I'm going to skip that and focus instead on the 20-day FLD, which, as you know, is one of my favorite tools. So let's take a look at what has been happening with the interaction between price and the FLD. Following a trough of at least 80-day magnitude, because this is the 20-day FLD, so we need to start with a trough that is 3 degrees longer in the nominal model. Our nominal model goes from 20 days to 40 days to 80 days. And so we start with an 80-day cycle trough. And the first interaction is an A category interaction. At that point, we expect price to cross up above the 20-day FLD and reach up to reach a target which has not yet been reached. I haven't actually even calculated it, but you can see visually, if we measure from this trough over here all the way up to the crossing point over there, our target is right up here in the high 1800s. So price hasn't reached that target yet, which is not necessarily surprising given the fact that we have an 18-month cycle trough looming ahead. So when we have an 18-month cycle trough looming ahead, that means that we do expect the markets not to be tremendously bullish, but to start beginning to show some bearishness and to start turning down. So that's not a big surprise. So the fact that it has not yet reached the target of the A category interaction suggests that the magnitude of this trough probably is only of 20-week magnitude and is not, in fact, of 18-month magnitude. So we can reduce our uncertainty slightly, and my level of confidence in this analysis is of the 20-week level. In other words, I am confident that this is a trough of at least 20 weeks. Luckily, all the trading that I'm doing in terms of watching what's happening to gold is of a much shorter time frame than 20 weeks. And so the fact that that's a 20-week cycle trough gives me enough information to make confident trading decisions. The next interaction between price and the FLD, this was the A category interaction, is the B category interaction, where price comes down and finds support at the level of the FLD. You've probably heard me saying that so many times. Price comes down and finds support at the level of the 20-day FLD at about the time of the 20-day cycle trough. And that is exactly what happened. There is our 20-day cycle trough according to this analysis. It might also be placed over here, which is in fact where the VTL has been drawn to. You might remember, if you go back and take a look at that VTL, it was actually drawn off one of these troughs over here, because that is also a possible position for the 20-day cycle trough. So far our sequence of interactions has been really clear, and it's really simple. There's no confusion at this scale. So what is going to happen next? Well, the next thing that's going to happen is that a 40-day cycle trough needs to form. Well, I should point out, of course, the next thing that needs to happen is this 80-day cycle peak needs to form. But if that 80-day cycle peak formed over here, which is quite possible, look at that whisker, quite possible that that did happen. In that case, we're not heading up into an 80-day cycle peak, but the 40-day cycle trough is the next thing that will happen. What needs to happen in order for price to form that 40-day cycle trough? It needs to cross below the 20-day FLD. Sorry, I should not say it needs to cross below, because it might not, but it is expected to cross below the 20-day FLD on its way down to the 40-day cycle trough. And so let's display our, which tool should we go for first? Let's display our composite model line here. You can see the very simple M shape that is expected to form here. So there's the 40-day cycle trough, then price will move up again, and then down into this 80-day cycle trough. Let's now take a look at the zigzags, perhaps, of the 80-day cycle, because the 80-day cycle could give us some interesting information. There we go. You can see that this first leg of the zigzag over here is slightly stunted. Can you see that? It didn't actually achieve its target, but the software thinks that it is very likely that the 80-day cycle peak has formed. And so price is expected to come down now below the 20-day FLD, form the 40-day cycle trough, and then it is going to bounce up again, reach up into this 40-day cycle peak over there, and then it will come down into an 80-day cycle trough, which is this nest of lows over here towards the end of October. So if I was to draw on this chart sort of what I'm expecting price to do, and let me just hide the zigzags for now because I don't think they're very useful. What I'm expecting now is for price to form a peak. It quite possibly formed the peak on Friday of last week, just a few days ago, but I'm expecting a peak somewhere around about here, after which I would expect to see it come down to the 20-day FLD. Keep your eye on that 20-day FLD. We're looking for a projection to the downside, and under normal circumstances price would reach down and reach the target for that 40-day cycle trough, after which time it would bounce back up again into a 40-day cycle peak. And at that point we're going to be asking ourselves, is it going to form a higher peak or is it going to form a lower peak before it turns down again? And we don't know that yet. But as we watch price action unfold, and as we see where the targets are as price crosses the FLD, and we monitor the fact that it is reaching or exceeding or failing to reach those targets, we can refine our expectation. The fact that it has failed to reach the target after crossing this 20-day FLD increases my confidence in the fact that this is only a 20-week cycle trough. But that is not absolute certain evidence. It is possible that we have an 18-month cycle trough behind us. If that is the case, then gold needs to turn bullish fairly soon. So if the 18-month cycle trough has formed, then we might not see price even reaching down to the target that is generated for the 40-day cycle trough. We might see price finding support at the level of the FLD instead. If that starts happening, then we need to start questioning the magnitude of this trough. But certainly at the moment, we have no evidence that tells us that this is an 18-month cycle trough. All the evidence seems to point to the fact that this is indeed a 20-week cycle trough. So that is what I'm looking at in terms of gold over the next few weeks, and I'm sure I will come back and record another video about gold probably sometime in October or November. Don't forget that we're looking for this 20-week cycle peak in November at some point, and so we're going to continue tracking the way in which price responds to the influence of the cycles to help to refine our analysis. But remember that even when there is some analysis uncertainty, keep your eye on these cycle tools, the FLD and the VTL, because as price interacts with those cycle tools, it reveals what is happening behind the scenes, as it were, in terms of the cycle analysis. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.